All right, you are not going to believe this story. What we're looking at today is one of the wildest corporate transformations I have ever seen. It's a story about a company that didn't just change, it completely reinvented itself, jumping from one industry to a totally different one in a massive, high stakes gamble. But before we get to the really strange part, let's just establish who this company is today. We're talking about Beeline, a mortgage lender. And they've already blown past $1 billion in closed loans. That's a billion with a B. That is a serious number, and it puts them firmly on the map as a major player in the home loan game. So you see a number like that, and you think, okay, how did this billion-dollar mortgage company get here? Well, the answer is not what you think. Not even close. It involves a pivot so dramatic you almost never see it happen in the real world. To really get how big this change was, you have to understand what Beeline is right now. So, Section 1, a new kind of lender. They're positioning themselves as an AI-powered disruptor, a fintech company that wants to completely tear up the old, slow mortgage rulebook. And get this, they've got the numbers to back it up. Beeline is posting 38% year-over-year growth. The rest of the industry, averaging just 9%. They are absolutely crushing it. Led by CEO Nick Luza, their whole mission is to use AI to make getting a mortgage fast and simple. By every measure, they look like a classic modern fintech success story. And this is where this story takes a massive plot twist. Because this cutting-edge mortgage company has a past that has absolutely nothing to do with finance or software. They used to make booze. That's right, whiskey, vodka, and rum. I mean, look at this. This slide says it all, right? The company we know today as Beeline Holdings was, until just recently, Eastside Distilling. Going from a distillery to an AI-driven mortgage lender is one of the most radical corporate makeovers I have ever come across. It's just wild. And this didn't happen overnight, but it was still incredibly fast. According to their own filings, the whole thing took about 6 months. It kicks off in September 2024 with a merger agreement. By October, the deal's already closed, and they start selling off the old business. Then it all becomes official in March 2025 when shareholders give it the green light and Eastside Distilling is officially renamed Beeline Holdings. So, the billion-dollar question, right? How in the world does a former distillery become a fintech powerhouse? Well, the answer is all in the technology. We're going to take a look under the hood at the engine Beeline built to completely change the game. Okay, so at the front line of their tech is an AI chatbot named Bob. And this is not your average clunky Q&A bot. No, Bob is a full-on AI sales agent working 24/7. And the results are just staggering. It turns potential customers into actual applicants 6 times more efficiently than a human loan officer. And when you've got an AI that's 6 times better at a key part of the job, well, you can bet that gets people talking. Headlines like this started popping up, basically asking if the traditional loan officer role is on its way out. It's a pretty stark example of how this kind of automation is changing everything. And here's what that tech actually means for you, the person trying to buy a house. Look at this chart. Their internal workflow engine, which they call Hive, gets loans closed in about 14 to 21 days. Now, compare that to the industry standard of around 42 days. They have literally cut the agonizing waiting time in half. So how do they do it? What's the secret sauce? Well, they've basically taken the entire messy, complicated mortgage process and broken it down into 3 clean, automated stages. First, their tracker grabs and digests all the customer info. Then, a decision engine crunches the data to give approvals. And finally, a resolution engine cleans up all the remaining tasks, only looping in a human when it's absolutely necessary. All of this incredible technology is aimed squarely at a new generation of home buyers. Beeline gets that younger buyers grew up online and they expect a fast digital experience for everything, even for the biggest purchase of their lives. And they're not slowing down. Just this past March, they launched what they call the self-service mortgage experience. The whole idea is to put the borrower in the driver's seat, letting them handle huge parts of the process on their own time, whenever they want. And why is this so important? Just look at this. Over half of all millennials and more than a quarter of Gen Z already own homes. We're talking about a massive, tech-savvy market that expects the same one-click convenience from their mortgage lender that they get from Amazon or Netflix. Beeline's COO, Jess Kennedy, really nails their whole philosophy here. It's about empowerment. It's giving people the tools to play with the numbers, to see their options, and to lock in a rate when they're ready, not when a banker's office is open.
Okay, so it all sounds amazing, right? A tech-fueled rocket ship. But, and this is a very big but, this kind of explosive growth and radical change comes with enormous risk. To really get the full story, we have to look at the massive challenges Beeline is facing.
And to their credit, they aren't hiding from it. If you dig into their official 10K filing with regulators, they lay it all out there. They use phrases like substantial doubt about being a going concern and point to a history of losing money. They're also heavily dependent on credit lines and operate in an industry that is swamped with expensive regulations. These are serious, serious headwinds. And yet, right after you read all those warnings, you get this from the CEO, Nick Luaza. His vision couldn't be clearer. He's basically saying, yep, we know the risks, but we're done being a diversified company. We're a focused fintech now, and we're using our platform as a weapon to take over the market. And that's not just talk. They put a huge number on that ambition. Their goal is to hit a $100 million annual revenue run rate within just 2 years. That is an incredibly bold target, and it perfectly captures the high-stakes all-or-nothing bet they're making. So where does that leave us? You have a former whiskey distiller that's now an AI-powered mortgage lender, growing at a breakneck pace, but also walking a very thin financial tightrope. It all boils down to this one question. Is their model, this faster, cheaper, automated process, the actual future of how we all buy homes? Or is it just a risky bet that hasn't proven it can last? The answer is probably going to reshape the entire industry.